Welcome back. Now, this week, inflation numbers and tariff letters and negotiations take center stage. These come as U.S. companies gear up to release earnings and the Fed prepares for its MPC meeting in less than 2 weeks. Chief Analyst at online trading brokerage GTC, Jameel Ahmad, joins us for a preview of the global economic week ahead. Thank you so much for your time, Jameel. Tariffs. Of course, U.S. President Donald Trump has imposed a 30% tariff on a number of countries now, including the European Union and Mexico over the weekend. There had been signals of tensions, friction between the U.S. and the EU and Mexico, and it's been for months now. I mean, just this final, or maybe not final, slapping of the 30% tariff for now. Was this expected, or was there a little bit of shock?
I think that we're trying to take things with a bit of a glass full stance right now, because if you look at the tariffs that have come in, actually it's concerning to see 30% on both the European Union and Mexico, because these are two of the United States' largest trading partners, once you take China out of the equation.
Yeah.
And another concern is that if we look back on Liberation Day, and it feels like a lifetime ago, but it was actually only 3.5 months ago that it was in April, that's the wackiness of the world we're living in, you had 90 different trading partners that had different tariffs on in that historic day. If we include the European Union and Mexico, so far we've had around 24 so 24 or so letters that have been printed out and posted on social media channels.
Yeah.
So what on earth is happening to the other 66 countries and trading partners? Are we going to see more letters keep getting posted out at unusual hours or any time of the day, as seems to be the case so far?
Yeah.
Or does that mean negotiations are going well with those trading partners, or not well at all? I mean, we still have more questions than answers. I think that what's helped the market from not having I would say, another brutal sell-off is that straight away you had that response from the European Union and Mexico that they're still talking to the Trump administration. They hope to still negotiate, see how things go. And of course, you saw a little bit of an olive branch move from the European Union, because they actually delayed the tariffs that were supposed to go on the US this week, retaliation tariffs. So I still think we're negotiating, but it's a coin toss right now, to be honest, heads or tails, towards whether these Trump tariffs are going to happen or not. We are simply guessing.
All right. Well, moving away from tariffs, well, actually, I don't know, because obviously we know the impact that tariffs could have on inflation. We do have inflation figures coming out this week from the U.S., but also in all of that, there's also an air of criticism on the Fed from the Trump administration. If it isn't on Fed Chair Jerome Powell, it's on the building renovations that they have asked for. What's your take on this level of friction between the Trump administration and the Fed amid the kind of inflation figures that we have been getting and we are expecting?
It's bananas, to be honest. It's simply Looney Tunes. When you think about how peculiar it is to criticize the US central bank chair in such a fashion. I mean, the insults that have been aired is just something that we haven't seen in our lifetime. We have to consider that actually it was President Trump during his first term that did nominate Jerome Powell. And even if he does provide a nomination over the coming weeks, and it's likely, that person's only going to get one vote. So even if he nominates the most downbeat of future Federal Reserve chairs, he gets one vote. And there's many votes in the Federal Reserve Open Market Committee. And one thing we're not talking about enough is that even when Jerome Powell is not the Fed chair, he will still have a vote as long as he continues within the Federal Reserve. So it doesn't change interest rate policy that much. And it's actually self-imposed for United States interest rates to have not come down in 2025 from the Trump administration itself, because of all the uncertainty that has been put on from erratic trade policy and other policy decisions. If the Trump administration actually showed some consistency so that businesses and economies know what on earth might be happening tomorrow and be able to plan ahead, I have no doubt that the Federal Reserve likely would have cut interest rates in 2025 by now.
Well, Jameel, I mean, it should be no surprise that Trump has turned on Fed Chair Jerome Powell, even though he was the one that nominated him, because we've seen the friction between him and Elon Musk. So, yeah, we really are operating on a taco trade where one man can really change his mind, in a split second. We do have U.S. earnings season kicking off this week, and this is in a time when companies are obviously concerned about the future and the potential impact of tariffs on the economy. What are the expectations for a quarter that was riddled with market volatility?
I think if you look at the earnings season that's coming up, I think companies are not going to really be giving too much away in terms of they're all going to provide forward guidance that they don't know what the future looks like.
Yeah.
There's uncertainty. What would be concerning if we finally see signals from these major corporations that potentially there won't be more job openings over the months ahead because of the uncertainty. But so far, despite everything that's been thrown at the United States economy in terms of erratic policies, we have to be fair that the jobs data so far has actually kept up fairly well. And the market's still showing some resilience. Yes, I completely agree with anybody that says US economy is slowing down in 2025, and it is, but it's not slowing down to the extent of a crisis.
Yeah.
You had so many institutions suggesting that the US would have the slowest growth of advanced economies this year. It was only a couple of months ago you saw those recession risks in some betting markets are well above 60% and so forth. But the data doesn't lie, and none of that data has really shown anything. In terms of what else we're watching over the coming period, we're keeping a very close eye on economic data elsewhere to see who's impacted by tariffs. And I am keeping an eye on some of the statements that were made about NATO budgets and what's happening with Macron, and that I would say raising the spending on defense.
Yeah.
I wouldn't read that much into it because if you look into the finer details, essentially they brought forward the 2030 target towards 2027. But the statement's quite clear that the reason why such countries are doing this is because the United States is showing a less, I would say, dominant stance towards global affairs.
Okay.
So certain economies and nations are just trying to take matters in their own hands.
Interesting. Well, we do have to wrap up the conversation there. Jameel, thank you so much for your time and for your insights there. That was a chief analyst at online trading brokerage GTC, Jameel Ahmad, with the Global Economic Week Ahead.